Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Mr. Marco, how are you, man?
Hello, Mr. Felix. Good. How are you?
Good. It's Adult Swim, so in days like today, and the week like today, the on the trading floor, somebody would always say something like, because it'd be so volatile, they just somebody be like, Adult Swim, like no children allowed here. This is Adult Swim now. Let the professionals take over here. It's a crazy market. The ups, the downs, up 2%, down 2%. I think the message that the market is saying is to slow down a little bit. That's the message. Slow down. Volatility goes up. Things move up very, very fast and wide. It's saying slow down. It's also saying we're shaking the tree a little bit, right? We're going to shake the branches and shake the tree, and we're going to get everybody out of the way. So the market's going to make, usually with times like this, the market's going to make another big move. Right, it's going to try to find its way to go wherever it wants to go, whether it's 400 or whether it's 360 or lower, whatever it wants to go. And the idea is that the market likes to not only shake the tree, but also make it very, very difficult to catch the crash or catch a gigantic move. It's just the nature of what leverage is. Leverage allows you to make the big move, but when there's too many people in the game, it doesn't allow everyone to win. Okay, and in fact, it starts moving around like this to get people out of the game to some extent, to get them going on the sidelines. It's a time where you should be very careful with your stops, careful with your entries. It should be a time of a little bit, not completely pulling back, but just being more methodical and more thinking about how many positions you have long, how many positions you have shorts. The price of, you call it, I like playing poker. The price of poker just went up, right? If you want to hedge your book right now, you got to pay a lot more money. Right. And so just a thought from what I've seen. The last thing I would say is we've been eyeing the bond market. Frankly, it's imploding. I mean, this bond market is imploding. And I've said it before, and I'll say it again. I actually have a video that I always tell you to watch. Is just watch that video, and it gives you some perspective that when the bond market is trading the way the bond market is trading, something is really, really wrong. In order for the market to move the bond market the way it has in the last 2 weeks, there's really a lot going on underneath the hood there. It just doesn't necessarily move that way. The other thing I have a problem with is that, interest rates are 2.25% right now, I believe, in a 30-year. Interest rates in Europe are close to zero. So there's this 2.25% differential, and it's still not doing anything. It's still not attracting enough buyers. Now, this differential exists. It's not like you can just go from Europe to US and say, I can make 2.5% more. I'm going to do that there. You actually take currency risk. So when someone is saying, okay, I like 2.5% better than zero here in Europe, but I got to take the US dollar risk. They're basically saying we're not even interested at 2.5% because we think the dollar is going to get crushed. So it's a no vote. It's a no vote of confidence for the world to us, it's dangerous. It's crazy how the market's down and bonds is still getting crushed. Usually when the market's down, bonds at least catch a bid. It's still getting crushed here. So there's something seems really, really wrong in what's happening here. But that said, let's look at, I just wanted to talk about a couple things because I see there's a lot going on in Tesla. And the story is, really, it's all over the place. I mean, the bulls, the bears, the stock is, was 800. Now it's eight something. Now it's trading a lot lower. We've talked about it here the last time about a week ago on this fake gamma squeeze. It still is a fake gamma squeeze. This I haven't even looked, but the puts is still not going to have moved at $20. Wake me up when it's 400, and then maybe I'll even look at it. But those things aren't going to really move until Tesla's 80, 100. You know what I mean? It's the way it is. So that was a fake move. But I have been eyeing Tesla over the last week and a half. I think what's interesting, I mean, I just read an article about price cuts in some of the cars. I see Kathy Wood buying the stock. So the stock is down and Kathy Wood is buying. And so the whole Tesla mob is saying, you know what? That's our leader. She's buying. We're in.
Right.
I would say be careful. I mean, she has to buy, right, when it's down. She has to buy, because the minute she sells one share of Tesla, she's got to have an hour-long video explaining why she had to sell one share of Tesla. I mean, it is what it is, right? She's long. She's in the boat, and the boat's either going to make the island or it's not. Right. And if she sells one share of Tesla, there's going to be an uproar and say, oh my gosh, she's getting out. Right. And I think that, it's something to watch. I think she's like, I will say over and over, she gets a lot of kudos, and she's, genius or not genius. People use the word genius, not genius. I don't know if she's a genius investor. I would say she's a genius in that she has played the game perfectly. Like, she has done an amazing job. She's caught the biggest momentum market in the entire history of stocks. And she was there, and she was just pushing the momentum, and momentum came, and it's perfect. I'm curious to see how it ends. I'm curious to see, the end of the story and what's said after the fact. I'm on record saying I think 90% of these stocks that are big momentum names, they trade under $10. I don't care where they are. Just show me one and I'd say under $10 at some point. And it's just the way it goes, right? That's history, and that's just the way it goes. But Tesla, the one story that I picked up over the last week that I'm not convinced is untrue is the Chinese government made some comments to Tesla regarding safety and controls, and I think there's something underlying that as well. China brings, they love Elon Musk. They've brought him in. Frankly, they've probably taken all his all his secrets, trade secrets. And then all of a sudden you see the rise of Nio and Li and XPEV. China now has their own countries that they can push, and their own process that they can push. Batteries as a service is something that might fit really well, not just in China, maybe around the world. And that's what they're going to push. They're going to push their cars in their environment. And a great way to get Tesla out of the way is to say, you know what, safety and controls, I'm not sure they match up very well. I think you got to go back and do some more work. That's not going to be good when China's a big part of the Tesla story. So I think there's something there. I'd be a little nervous. Obviously, we can look at the chart here. We talked about the chart over the course of the last few weeks when it was, we see here Tesla, it was breaking down. And maybe that was the point of this fake squeeze. But, you have this sort of diamond playing out here. And, the fake squeeze happened right here. This was the fake squeeze day. And it broke this diamond pattern, because these diamond patterns either shoot up, right, or they shoot down. Okay. And this is a consolidation after a large move. And the idea is it's going to make a large move one way or the other. Well, maybe the fake squeeze was to just get the ball rolling a little bit, right? Because it was timed perfectly right here. And after that, the technicals, maybe the machines, these things traded. A lot of these stocks, 80, 90% of the option of the stock flow is traded by machines these days. So the machines have rules, and maybe this is one of the rules. It sees this trend, it breaks, and now there's pressure here, and breaks 775, hit 6.25 the other day quickly, but it's starting to trade through 700 here. That being said, the question is, where does it go? And I would say, you have something that's, had a big move. This was S&P 500, shot all the way up. Okay, so it shoots all the way up, has this, and now it's doing this. Breaks here, and yeah, there's a little bit of consolidation here for 3 weeks. So, you could see a little bit of stoppage here, but frankly, it might just go to where the supply, where the demand came from and where they bought it. And even though they got rid of some, and that was the index. So maybe not all the way back to 400, but I could see, somewhere in this range right here over the course of maybe even the next 4 or 5 weeks. I wanted to take you to, I look at Tesla, not a lot, but because it is tough to trade. And I'm going to show you why. So if you look at this, we look at the open interest a lot of times for the SPY, but you can use them for stocks as well. And Tesla is one that I think you can get a lot of information from. So I just click on puts. I click on a range. Now that the pattern is broken, this bullish pattern is somewhat broken here. I would say not the long-term pattern because it's still an uptrend, but this shorter-term consolidation broke. We can look at 600 to it's trading 700 puts, and we could try to see where's the open interest, right? Where are the bets being made? And we talk about how important this is because the open interest, they act as, if you will, they act as stop signs. Okay, so this is 20,000. This expires tomorrow. 20,000, and let's see if there's anything higher here. Okay, it's all 5,000, 5,000, 6,000. Okay, the market's broken through 700 here, and this is 20,000. The 70s, 80s, 556, 20,000 and 50s. Now we don't know if they're bought or sold. And frankly, some of this stuff might have been sold. The 650s, the 20 looks like 20 and 20 matches up nicely. So maybe there is some 700, 650 put spreads going on there. Same here, 16, 11. We don't know. But what I would say is I like to look at it and just say, imagine you or me or anyone owned all of these. We owned all of these. We were the only ones trading at Tesla, right? To give you some pros. We're the only ones trading and we own all of these. Let's just imagine. Okay. And what does that mean? That means 20,000 options at 700 means we have the right to sell how many shares? 2 million shares at 700, right? Easy enough. Now, do we have the money to buy, to actually go out there and really sell 2 million shares? Not likely. Okay. But if you could do that for each one of these, okay, 600,000 shares, 1.9 million shares, 700,000 shares, and 1.1 million shares. So there's a lot of stock that, is giving us the right to sell. By tomorrow, most people, so let's just assume that we have just enough money to buy these, but we really don't have enough money to just get short, $1.4 billion of Tesla. Okay. So what we're going to do is what do we have to do by tomorrow? Let's assume, okay, we can do one of three things. We can either, if it goes above 700, we can let these expire to zero. 2, as on the way down, or even if it's up a little bit, we can sell them outright to close. Or 3, we can roll them out to another week or another month. Okay, is that fair? Yep. So far, so good. Okay, so I have the board mapped out of, I call it, where are the bets in Tesla? Where are the bets? Where? Let me see. Let me go through time here and say, okay, where are the big bets? Well, the big bets are basically, you're seeing them right around here. The biggest bets. I take the top 5%. Okay. So by tomorrow, these are going to disappear. These stop signs. And the reason I call them stop signs is because why? Because if I have to sell, let's start from the beginning. If I buy puts, what type of pressure does that put on the market? If I buy puts,
downward
pressure. Okay, so downward pressure was already put on the market. You see, I bought 20,000. These are already made. These bets are already made. So I have already put the pressure on the market. Now, when I get out of the puts by tomorrow, what type of pressure am I going to put on the market? I have to sell the puts. So what type of pressure am I going to put on the market? Upward pressure. Correct. So by selling these things that I have to sell by tomorrow, or let them expire worthless, or roll them, I am putting pressure on the market. Okay, putting pressure. When you put pressure on the market, what does that mean? That's demand for stock. So that means I'm going to put demand for stock. This is 2 million shares of demand underneath 700, 2 million, underneath 690. It's going to be 400,000 plus 2 million. So 2.4 million, call it 3 million. below 670, call it 3.7 million, and so on and so forth. You could just cumulatively add all these things, right?
Yep.
Okay, so is the stock going to get through 700, 690, 680? I don't know, but what I'm telling you is that it's got to get through me first because I have something to say about it. I have to get out of these. So I'm going to be putting pressure, buying stock of Tesla. Now, Tesla does trade a lot. And so these things are going to have, they will have some effect, not all the effect, but they definitely have some effect. And so what I'm trying to outline to you here is that by me owning all these puts, because I always say the market can't crash when everybody's long puts. It's because when everybody's long puts, that means we're going to be putting pressure upwards. When Tesla's trying to go down a lot, we're going to be buying it, pushing it back up. Okay, so it's going to sort of slow down the move. Okay, so that expires tomorrow. After tomorrow, let's assume that Tesla lands or ends tomorrow at 7:05, and all of these go to 0, 0, 0, 0, 0, 0. Now, how many puts do I have? I have none. I was just in here. I have now nothing. Imagine if it goes to 600. If the Tesla goes to 600 by tomorrow, and I own all these, I make, how much is that? I probably make $700 million if it goes to 600 by tomorrow. Okay. If on Monday it goes to 600, I make 0. See how that works?
Right.
Okay. So by tomorrow it goes to 600, I make 700 million. If it doesn't, and it ends tomorrow at 7:05, I make 0. I actually lose all my money. I actually lose. And then on Monday it crashes to 600, I make 0. So that means I'm going to have to buy more options the following week. But in order to do that, these options the following week, they cost a lot more money. Okay, they cost a lot more money. And so I start saying, okay, well, I only have X dollars to spend that I have on the table here. If I want to buy one more week, then I'm not going to be able to buy 2 million of the March 5s. I'm going to start buying the 650 puts over here. Or I'm going to buy the 640 puts over here. And I'm going to start buying these puts down here because I don't have enough money to spend for these puts over here to buy the same amount. So I'm going diagonally down. Do you see that?
Yeah.
Okay. And so what happens is that I keep talking about this lockstep down, whether it's the S&P 500, whether it's a stock like Tesla. Once people get long these puts, and then you can see the day trading volume, goes up because people are trying to buy, the 660 puts for, $3 or $4 for tomorrow or $5, whatever it is, and they're trying to buy this. And that there's a lot of day trading going on in Tesla. And so the point I'm trying to make is if you look at something like this window, it could sort of show you in lockstep how this thing could potentially move. Now, once all this is gone, we have not much here. Okay. But I'm sure by tomorrow you'll start seeing picking up. This will start increasing. So what they're doing, the market starts doing is it goes in lockstep, trying to buy puts, trying to make money, high leverage, which is buying short-term options, high leverage on a potential crash. It's hard to do when the whole market is trying to do that and they're moving across week to week. So what has to happen is a move, something like this, which moves it down sharp. Yesterday or 2 days ago, it traded down very sharply. People start loading up in puts here. They're going to expire on Friday. So all those puts go to 0. And then they don't have enough money to buy the same number of puts for the next 2-3 weeks. And so they're not there to catch the next 600 move, the next move down to, let's say, 600 or 560 or 550. Okay. And that's the way the market works. The market, almost by design, leverage by design, forces people to cover their positions or to get out of their positions. And when everybody's doing that, it provides this sort of, it's like an elevator that wants to go down and all of a sudden, it's being pushed back up, or somebody saying, nah, I got to get out of this because I can't exercise. So I'm going to move everything back up. And then on Monday, when there's nobody there, then it's free to fall. Time and again, you will see this. A lot of this is the underlying mechanics that's going on here is called gamma and delta hedging, gamma hedging. Again, we have a couple of videos like the Robinhood video and a couple of videos. There's one, do you want to show them on the YouTube channel? How you can lose a lot of money trading options, volatility, gamma. If someone's interested, you can go to the YouTube channel and see, I give an examples of gamma trading, delta trading, so you can understand the mechanics. Or you can just visualize this board and say where the bet's being made. What happens after March? Look, there's nothing. There's no puts here. Nobody's long puts. Nobody's long anything. And so you have this month here where, sure, it's the market's going to pay off the least amount of people. And 16,000 is not a lot for Tesla. But if you look at the daily volume in Tesla, we can just go here, Tesla, and see, 553,000 options, 100,000 in the 1 weeks. And these are day traders here, most of them. Okay. Most of this is day trading. And so, it becomes difficult to catch a violent move in Tesla intraday because there's so many people jumping in, and then it shifts down on the buys of puts, and then shifts up, and then the call buyers are moving. So everything is moving. All the options flow is moving Tesla around. But at the end of the day, 700 becomes a sticking point, because that's where you see how the volume is 59 here, 21, 720, 23, 680. By tomorrow, 680, 720 is probably the range where you got to eat through a lot of day traders and a lot of these 1 weekers who are playing this Tesla game. It becomes difficult. It is a difficult game to play. Okay. It's crowd psychology. And I think what I'm trying to show you is that exactly right here, where it's, where you could see it by looking at the board and saying, okay, let's look at where these bets are being made. Let's look at how
those are calls, right? Oh,
that's calls. Yeah, there we go. Puts. So let's look at how the bets are being made here. And look, you could do it for the calls as well. Like, where are the calls? Where, if I went to 700 to look also, where are people trying to, are people catching up? Are people trying to bet to the upside? And you find much less calls on Tesla than you saw in the puts. Okay, but they have 800 calls here that people are still betting on. You'd have, if the stock starts going straight up, you got a wall here of 800. You see that going? People have been making their bets here at 800. So, this is just something to look at, for traders that are looking at seeing, okay, when can Tesla actually go down? I would say Tesla probably can go down just by looking at this closer to, mid-March. It could start making its move closer to mid-March. That's sort of how I would handicap it, simply because, I think it would do something like this diagonal move towards April. So you got this diagonal move down to like 600 by April, something like that, where, it'll go down, and it could go down to 550 and then back up. And, but it's this, you start getting into this to effect where it'll be a range around, call it 100 points as it's moving down week after week.
Right.
Does that make sense?
Yeah, definitely.
Okay. So that's a big name people watch and people like to trade. I just thought I'd give my 2 cents on how to think about it, how to look at. I don't think many people provide this type of board with the open interest there. I think it's mainly because people have not explained how to use it, but it is an important tool to sort of visualize what you're seeing and sort of timing of when this thing could actually trade down, if you're thinking that it's going to trade down.
Right. Okay. Why don't we go over a few more EV names? What do you think about Lee? I think I've seen something about Lee.
Yeah, so Tesla is, well, it's a perfectly right. So Tesla leads right into the names that we're looking at, right? And Nio, and let's just look at Nio and Lee. I just want to see the charts. Let's just go back to look at a bigger chart. Nio, Lee, XPEV. I mean, none of these have had very violent moves down. I mean, this is not XPEV. This is not a violent move down, 5 points. You want to see a violent move down? That's a violent move down. That's a violent move down, okay? Lee is not a violent move down. This is, simply a stock that is going lower and selling and whatnot. But this 27 to 23, that's not violent. Violent is going to be, 20, 80 to 16 in the next 3 days. That would be violent, okay? Because that's going to take people and say, wow, we just got smoked here, and, this is a Chinese EV name and blah, blah, blah. I've stayed away from all of these because they're high. as far as valuations and every seems like every EV company is worth 10 to 50 billion dollars. Not saying that they're bad companies. I'm just saying that, I miss this, and so I don't want to be here when it's it's trying to figure out whether it wants to go from 60 to 100. 60 to 100 is not terribly exciting when the volatility in the options is has been 150. Now I think they've probably lowered Nio. Okay, so it's up a little bit today, but only because it's down. But this was 150. I think even 200. You were seeing these implied vols back when it was a little bit over here. I believe I want to remember 150 for whatever reason. But something like this is, to be honest, I think it's a little bit muted, right? So you have to look at, if I'm going to pay 100, if I'm going to pay 150 volatility, here's some good logic for you. Okay, if I'm going to pay 150 volatility, it's when the stock is doing this, right? It's when the stock is doing this. When the stock sort of breaks down a little bit here. Okay, when the stock. Okay, so when the stock breaks down a little bit here, I missed this line here. Now I'm doing what I tell you not to do. All right. When the stock breaks down a little bit here, you see this sort of trend here, and this was over here. Let's just look at like this. So, I'm looking at this and going, okay, there's people trapped here. There's, not everybody got here. People started getting excited right around here. They made some money. It does this dance, and then it comes up here, and people are, there's the last buyers are up here. There is buying. There's volume going on. I'm talking about 100 million a day. There's people trapped up here. There's people still here holding that it doesn't break this. So, what likely happens is likely you see a 37.5 break. Likely. Why? Because the market's going to try to, before, and I'm not saying Nio can't go up to 1,000, 300. I don't know where Nio can go. Maybe 5-10 years. But what I'm saying is it's not going to do that with everybody on the bus, right? It's going to be like, all right, we just took these people out of the, off the bus. Some of them anyway. Some of these people are getting nervous, and we're going to take it here. We're going to do something where maybe we take it somewhere to like here, and we'll get a lot of people jumping off the bus. Here's a gap move right there. So see that gap? Markets like gaps. So, okay. Which is interesting. See 52.5. Just to show you like what I see. See this, like there's this move here, just 52.5 sharp move. The stop right here. Do you see that? 52.5.
Can you mark it? Your cursor doesn't show.
Sorry. 52.5. You see how when it went down, it stopped, went through, came back 52.5. Do you see that? 52.5 here is doing a little dance here. 52.5 within given 5 points. Well, look at this. This is I'm just connecting these eyes. So 52.5, 37.5 is how much?
15.
15. Yep. 15 less 37.5 is how much?
22.5.
22.5. Okay. And here's a gap. So that's the only reason I did that. And let's just for fun, 52.5 plus 15 is how much?
What? 67.5.
There you go. 67.5. 67.5 just happens to be the high. Like, do you see that? It's like perfect, right? It's not, it's like in lockstep, so when people talk about computers and whether or not computers are involved here, and by the way, I just looked at another one, you go one more down, 15.5 less that is 7.5, which seems like there's another gap right there. Okay. So, this seems like it would, you just imagine people are getting in here, people are getting in, you see the volume, people getting in here all the way up. And again, all I'm describing here is framing out what I've been trying to teach you for the last 6 weeks. This right here is momentum. This is psychology, stock market psychology. And what would hurt the most before, if I told you, sometimes I can give you, for example, I can give you the Wall Street Journal, and it could say Nio is going to be 150 in 2023. And you still might not be able to make money because you can actually, you're going to get excited. You're going to over leverage yourself. And before it gets to 150, it might actually do the worst thing possible to people. It might actually trade all the way down to say 15. Okay, so these people get off the bus, these people get off the bus, these people get off the bus, and then for whatever reason just shoots up and makes this huge move to 150. So unless you have the firepower and you're in cash and you really believe it's going to 150 like Tesla did, and it's going to take 5 years in China, then fine, you might have to live through a 70% drawdown, 80% drawdown from where you're getting in up here, 40% here and 20% here. Does that make sense?
Yeah.
Okay, so this, you can graph any one of these. You can start thinking about them, and they're all going to be the same. And ultimately, they will all end the same. So you said Lee here. What did you see in Lee?
In Lee, I've seen some puts in March.
Calls here, some calls here too. So I guess my eye immediately looks at this and this. Maybe they're not related, but I just want to check the calls for a second. Okay. Implied volatility is going up here. Okay. Looks like maybe this was a sale, and then maybe buying. I don't know. It doesn't look like it's any spreads. I just wanted to see if there's any spreads, but okay. So then we see Nio, the 22.5s, implied volatility moving up, stock moving down. Okay, these definitely look like puts. Let's just verify a little bit here. 4,500 at 11, 4,000 at 63. Take the offer. Comes back for more an hour later at 93 cents at a higher vol. Takes the offer. Okay, yeah. So someone is playing, looking at buying Lee 22.5 puts. Using this as sort of a little bit of a guide here. Let's just throw 17, which is probably about, we're at 17, 18. Okay, 17, so 17.5. Okay, so let's call it 17.5. Now I want to look at Lee, and can we get to 17.5? Well, I mean, I could just see it from here. It's breaking down here. Okay, it's having a tough time here, and we said yesterday, I'm just going to draw that line. So we said yesterday, this is positive, this is okay, but it's got to get through here. If it has a tough time here, the break is, somewhere right around here, right? Isn't this sort of the level where it took off? So you have that, and then I would call it, okay, we can call it this. So, you're talking about someone paying for the 22s, and this is in the month of March, so you get earnings on the 15th. Yeah, so they're looking for earnings on the 15th, and they want to hedge themselves and actually play it lower. When these things come down, again, when they come down, and I'm not saying they're going to come down, I'm just saying I've lived through the NASDAQ bubble. When they come down, it's not like they crash right away. They do this 6-month crash where it's going from the highs, and you get more believers here, and then you come down 17.5, 18. It sort of matches up with exactly what we've done here, which is simply mapped it out somewhere between 15 and 18, and this person is buying the 22.5s to try to get to this range. Is that fair?
Yeah.
So it looks like a valid trade, trading the weakness here, trading this stock sort of breaking down through this level, right? Because we're the buyers. Buyers here, a little bit. We said yesterday or the other day, we didn't see. You'd like to see buyers here, big volume, buyers here, again, big volume. This wasn't so much, but okay, it went back up, and over here, where are the buyers? Where are the big institutional buyers? So I'm afraid that some of this EV has lost a little bit of luster. And I think we've seen that. I mean, I always go back, what's Blink doing today? The Blink was a clear one where someone told us we think it's going to 35. It was very clear.
Right.
And yesterday it traded 32.5, 35, and today it's trading weak again, 38.5. So it was very clear, and that was happening literally right there. Stock was 56.5 on February 8th. So we're 2 weeks later, and the stock basically gets through. Right. So that's that. So that's Lee. It looks like a valid trade. There's open interest here too. I'd have to go through some of this to make sure, just to see, because people have been playing puts, but that's someone looking like establishing a new position here and looking for 17.5. Call it 17.5.
Okay, that's fair.
Okay.
Cool. All right.
Good. What else we got?
Now I have a question for you, but before that, I just want to remind everybody to make sure to like the video and help us out. And comment below any questions if you have. We're gonna be answering some at the end of the episode. So now, I guess you've seen in the news that this WallStreetBets is coming back to life. GME had a huge jump. So I'm thinking, is there any opportunity in options to play these names? And is it harder than it should be?
I would say WallStreetBets has always been alive, man. They made a lot of money. They're still alive. They're still kicking. But yes, the group is getting fired up. GME hit 200 yesterday. It was sick. I mean, I have not seen anything like the GME story in a very long time. It just, whoever bought the rights to that movie, I think it's in what's his name, Anthony Fuchsia, I think. Well, a big director came in and said, yeah, he wanted to do the movie. If they can make a great story around it, this is like life-changing stuff back and forth. And look, it's incredible to see the guys. I mean, there should be like this wall of like Hall of Fame for people who have held on to the stock from 10 to 500 to 480, whatever it went, to 38 or whatever it went down, back to 200. Like, whoever did that, whoever has held the stock, I mean, it just deserves like a Hall of Fame wall, to be on that wall and saying, you know what, when I believe in something, I'm a holder, right? I'm a holder. Everybody else, I think everybody's a poser. Like, people don't like to hold. They don't like to hold Bitcoin. They don't like. If you held GME through that, man, I give you so much credit. It's like, either you're crazy or you just believe in whatever you believe in. I don't know what it is. The makeup, there should be like human testing for that type of psychology. It's incredible. Okay, it really should. So that's the good thing. News. The stuff that, what I do here is simply options and trying to help people trade options. And what I would say is, I bet that just by looking at the implied volatility, I bet that Citadel and the market makers lost a lot of money here again. That's what I would bet. I would bet that they got hurt. Okay. Maybe not. Most people in GME are buying options. There are people, net people are buying options. So net, if you're buying options and the stock goes from 50 to 200, any market maker is likely to lose money. Okay, they're likely to lose money. So they've likely lost money here. But what I would say here is to watch this. You see how high this is? Now, granted, it's warranted because the stock is moving around again, perhaps in $100 ranges. But this is how Citadel makes their money, right? They raise this ridiculously high, and then they make the bid offers ridiculously wide. And so you talk about, let's just do the quick math. 340 plus 110 plus 1 plus 50. So there's 160, call it 300, call it 650, 650, call it 450,000 shares have traded. 500,000, let's call it 500,000 shares, options in GME have traded today. And the bid offer is on average $3. Okay. So 500,000 options. And a lot of people are doing day trading in this GME. 500,000 options is 50 million shares. And on a bid offer of 50 million shares, you're talking about 500,000 options. Is that right? 50 million shares. And then you talk about $3 times $3 is $150 million of bid offer.
Right.
Okay. So, people ask, how does Citadel make money? Well, they make money on raising the implied volatilities and making it much more difficult. They also make money on skew and moving skew around because they know where people are coming. They know people who have calls are trying to sell them, so they're not going to be bidding a lot for those calls. They're gonna, they're gonna do everything in the book that they can within the rules to take your money. Okay, and the idea that you can come in here and start trading around $3 wide bid offers and make money, man, I would try to erase that. If you want to do something in the options, just gotta hold it like you've held the stock for a little bit. Okay, that's one thing. But to come in here and think that you're gonna I'm gonna buy this and then I could sell it later on at at a profit. I don't believe that you can make money with $3 wide options. I think it's very, very difficult over time. You may make money one day, but Citadel wants you to keep trading. So think about that. If they lost 100 million on the move, or 200 million on the move, maybe 300 million on the move, it only takes them 2-3 days of doing this, where the implied volatility is high, where the bid offer is $3 wide, where they can move skew around whichever way they want, and they could just move things around. And so that's what I would say. I would say take it easy with the day trading of the GameStop. And man, diamond hands, what they call them. So I mean, sick, like absolutely, like kudos to them, like sick, absolutely sick. This is an incredible. This is Harvard Business School case study on trading. Like
Right.
it's without a doubt. There's psychology. There's short interest stuff, naked shorts, options, gamma squeezes. Like if there is ever a trade, and then you got social media. If there's ever a trade that Harvard Business School can make a case, this is it, and it would be awesome. And if somebody needs me to comment on them or what I see, then then give me a shout. Okay, so that's what I would say. I'd just be careful. I would point out that it's right now is probably not the day to be buying any options in GME GameStop. Okay,
right.
Probably not the day. When it was 50 and you wanted to take a shot, and before the news hits and things get crazy and the volatility was a lot lower than it is now, sure, take a shot, no problem. But trading anything north of 200, 300, 400 volatility it's way too much. See here, Rudy asking, bid ask looks small on the leaps. Yeah, but the leaps have enormous volatility, and so even if it goes your direction, and I'm talking about within 100, 200 points, and you have the leaps, you're just not going to make a lot for what you're risking. So the risk reward is not there just because they're making you pay. I don't know. Let's just give you an example to put in perspective. So the leaps, the Jan 21 leaps, the 200 Jan 21 leaps. How about the 300 calls? Okay. So the January 300 calls are basically, let's call it $100. Okay. So 300 plus 100, your break even is 400.
Wow.
Okay. So, in order for you to actually a good risk reward, you would have to think this thing is going. I mean, 300 is a double from where it is. That could happen tomorrow night, no doubt. But if it happens tomorrow night, that $90 turns into, where are the 200s trading? 105. You see that? If this goes up $100, right? So now we're at 272. Look where the 200s are. They're 105. So if it goes up $100, those 300 calls are going to be worth maybe 110. So you literally risk 95. The stock goes up $100 and you make, $10 to $15. That's a disaster.
Wow. Yeah.
Right? Capiche?
Yeah. Better off playing the stock. Yep.
Better off if you want to play stock and have, good stops, for sure. I mean, but you see what happens with these things. When there's a stop, it's a stop, opens up, they print a stop lower. So I would say at this point, if you're in it before this move, great. If you're not in it before this move, slow down. Don't just jump into the pool right now. This is if we're trading adult swim in the regular market, this is like, the elite of the elite
Michael
of the elite.
Phelps,
This is the only, 3 people in the world should be trading this. And by the way, 2 of them are Citadel and Virtu. That's it. They're making markets. And if you want to play their game, by all means, they're opening the doors and saying, come on in. We want you in. So be aware. Be careful. Okay.
Great.
Good.
Thank you.
Any other questions?
Let's actually run through a few of these. Have GEO. If you want to take a look at GEO, yeah.
GEO? I never heard of it. GEO,
they do private prisons.
Yeah. Interesting. Yeah. Private prisons. Okay, I see a picture here. Michael Burry goes on buying spree in the fourth quarter. Oh, maybe he's in the name. What are they buying? The 24s? Hang on. Let's see. Let's just see. Whenever I don't know something, I usually just go here just to give me one story or something. Tell me what's going on here. Okay, so maybe it's like a REIT dividend type of thing. There's some dividend cut, and then that's the huge. Okay, so I have a lot of debt. Federal. Okay. Federal, or so they must have a contract
with the government, right?
With the government. Okay, GEO faces racial return. Critical federal contract might not move forward. Okay, that's somebody's opinion. Okay, so it's interesting. So at first it looks a little. I see the price and it looks a little high. It's a $7.70. They're paying 54 cents. It's kind of a dividend stock, and usually dividend stocks don't trade, like this, basically with 80 volatility, and a high dividend. But I see this here too, and I see that the stocks drop. So what I would say here is people are looking for, let's call it 12. Is that right? At 12 and a half. Okay, so people are looking for 12 and a half. Okay. So I get the point here, 25,000, they're buying. It's likely they're buying here. They come in the morning, stock shoots up. Yeah, they're buying. Okay, so they're buying calls. Okay, so buying calls makes sense. Probably Michael Burry's in it. He's bought some, has a good dividend yield. But the thing to keep in mind with dividend yields, whenever I see a dividend yield so high, right, you can put your money in government bonds at 2%. You can put money in corporate bonds at 2 point whatever, with a little bit of spread there, or junk bond, whatever. People are trying to get yield, right? They put their money to get yield. Some of these high yielding names, if something is offering 13, 14%, that means that there's possibility of trouble. Okay, so what is it, GEO? So there's possibility of trouble. And the question is, in order to invest in this stock, because for getting 13% is great on your money. However, if they drop the dividend and it becomes zero and the stock goes down 50%, then you're going to have lost 50% on your money. So you want to know what you're investing in. And I see that the stock is under stress here, and it's dropped here a couple of times now. Once, twice, 3 times. Something looks a little bit wrong. They're buying these 9 calls, and they thought, what did we say, 11 and a half?
12.
12? Okay, so let's call. I just want to see a weekly. I want to see, like, give me 2 years. Okay. So they have government contracts, which we know is very good if you can hold it, right? It's very good. But if you lose it, those contracts, then you can be in trouble. Okay, so it looks like they probably, the story is, just from reading that one paragraph, the story is that they build prisons, these private prisons. There is a big need for prisons in the United States. There's overcrowding. Here comes a company, says, we'll build them, we'll manage them, and then we'll get a contract from the government. And how do we do that? We raise money. We get debt. We take that money. We actually build the prisons, and then we get the contracts to hire the people, and then we have ourselves a business. And then we can just add more and more prisons, take on more and more debt. And as long as we have these contracts servicing them, we're going to make good money. The problem is when the contracts are up and the federal, the prison bureau says we're not going to renew, then the whole thing falls down. Okay, so I don't know when the contracts. I would have to see. The first question is, when are the contracts up? Right, that is the first question. Because they're buying Aprils that we saw, April 9s. Okay, so April 9s. So I would assume that there's talk of contracts expiring within the next 8 weeks, and that's why it's starting to get some press. So I would like to see those contracts. I don't know if they're public. I think you can go back in the earnings and maybe look into the SEC filings, or look to see where there's probably somewhere online that you could sort of see when these contracts were, what the dates were. You might have to go back. Sometimes these contracts are 5-year contracts, so you might have to go back. The reason why it went up here, see this, might be because they got a federal Bureau of Prisons contract.
Right.
Okay, so I would look somewhere around here for a potential contract that you could see. It might say 5 years, or 4 years, or whatever it is, or maybe they got an extension, but maybe it's coming up. And if it's coming up, then this becomes a binary situation. So if it's a binary, if that's, let's just say March is the day that the expirations, we're going to learn the answer. If they get it, the stock is going to trade up a lot. If they don't get it, then the stock is going to collapse. That's a binary situation. That's a situation where you want to understand what you're getting into. Forget about the 13%. That 13% may be gone. Okay, a lot of these, you saw the title, they call them traps. The high dividend yield lures people in them, but they're high because there's a lot of risk. So the risk here is apparently the contract. So we have to look at the contract. We have to see if the contract is, if there's a date. I don't know why they're buying April, but I would assume that they maybe have learned something, or they see something, and we want to dig into that. And then if we find that date, then hey, a 50-cent contract, a 50-cent options price may not be terrible, right? And then you can see that the stock could actually get to somewhere around here. Okay, this is where they got the contract, if they did, or there was something that happened here, and that's 10.5. That's where it dropped off here. The market's coming off. I would say there's different levels here, but you could probably make the case that it can get back to 10.5, 12.5. Okay.
Okay, fair enough.
That's GEO. That's what I see there. I don't even know the name, but that's what I get.
Yeah. Let's also look at
What else?
DVN.
Devon Energy,
Yes, Devon Energy. Yeah. Tell you what I saw. I
oil name,
saw March actually puts. Yep, that's what I saw.
March puts. Interesting.
Hmm.
Okay. So what do you see here? Which line do you see here? Just let's look. Let's start with the chart first.
Let me just see.
You tell
Okay.
me.
10, 10, 9
10. Okay.
on the bottom
What
one, and
else? What
then on
else
the
maybe
top.
we
Okay.
see?
Yeah.
Yeah,
Then
that's how. Yeah, why don't we do it
around
that way?
20,
That's fine.
21. Yeah.
Okay. 6. Good. Let's see. Let me throw one more here. Okay. Okay. So we're gonna do. Just trying to train your mind to sort of look to frame this thing, right? I would say the first line I see is this line right here
Yep.
because it was bounce, breakthrough down. Okay, 5, the low, and then you had this right here, the 15. Okay, this is sort of near term, the last year. Okay, and then I can go back and say, hey, you know what? This actually has a longer history here, somewhere around 17 to somewhere around here. There's something going on here, and look, we just climbed above it. Okay, we just climbed above it. So it's surprising that they came in to buy puts. Somebody doesn't believe the story here. Just by looking at this, I would think if you would have said Devin, I would have said, oh, somebody's maybe looking for like the 30 calls, right? Because it's climbed back through this important 20 level. Maybe it's done with this and now it wants to move back high. So just by initially looking at the chart first, I'm a little surprised that you have this. Let's just call it over here. It's going to look something like this, right? If you went from this top, looks like it around here. I can't see it. But you're going to have something around, say, 27 or something like that. That's what I would think. So my first impression was you're going to say calls. It's not calls. So let's look at what they're looking at. Okay. Devin. I see here, Devin. Okay. Devin.
That's April.
Yep. Yeah. Oh, we're looking at March. Yeah. Let's see, March. Okay. There you are, Devin. Okay. So I do see you see the open interest here in the calls. So it looks like people are setting up. They're already there for the move higher, right? They've already been there. Maybe this is actually, getting out of some of this today. Here, now they're setting up back down, it looks like. So 17,800 puts. Okay, so we have 10,061 volatility, implied vol is up. So this was 3 vol points higher, these trades. So the first thing I always look at is this, right? 2-3 points higher. Then I will look at when they were bought 1013 and 1038. So 1013 here, 57 cents. 52. After I bought them, I paid up and immediately came offered. Then I paid 61 cents, which is higher again. Stock was actually, see how the stock actually went down? I paid 57 cents with the stock 22.45. The stock actually went down 16 cents, and then I paid 61 cents 10,000 times. Right? So it looks like, and the volatility went up a little bit. So it's only 16 cents, and I paid 4 cents more on an out of the money option. So the volatility is showing you that we paid higher here on the second print than we did here. So I would say that it was a continuation buy of puts on this 10,000, and it just seems like it makes sense. The stock, a couple lots traded here, and then traded back up to 61. So I would think that yes, somebody is buying puts here. Okay, what are they targeting? So if I look here, 1780. Let's see. Let's call it 17.
Yep.
So 17. Okay, perfect. 17. So I'm targeting 17. 79 cents to 17. Let's go to Devon Energy. Can I get back to 17? Well, now let's go back to, this is March, right?
Yep.
So I want to go back to let's go to 6 months. 6 months. All right. All right. So what do I see here? So what am I doing here? We've seen this before a little bit here, and it doesn't always work. It's a good indication, but we see a MACD divergence here.
Mm-hmm.
Okay, a MACD divergence where essentially the stock moves up to a high, okay, and the MACD moves up to almost a high over here. It's about the same, okay, so matches the high. Then the stock moves up to this high, and we see that the MACD is lower here, okay. So we have this MACD divert. This is called a MACD diversion. By itself, it doesn't mean anything, but it's oftentimes is a good indication where the stock could actually come off. Okay, if you're right, if this is right, then the stock could actually come off back to sort of. Let's look at this level. See, I'm taking this one because this one was first. I sort of waited a little bit more here, and then we see it break through, come back down. Again, the buyers step in. Not a lot of buyers. You see, this buyer was big, but then when it came over here and it rose again, it wasn't like this. You don't see a big volume spike here where people are super excited. So I think that all portends to a little bit of potential weakness if it starts coming down here. And where could it get to? I mean, this is the support level. Supposedly support. It did it once on the breakthrough here with good volume. Okay, but notice this right here, when it broke, it did come back and it held the support, but I just don't see great volume here. So this thing trades, floats up. I see what they're looking at. I don't know the reason, and I don't know Devin well enough to speak to the fundamentals. I would have to go to the earnings, the transcript. I would have to go look. I would have to see how does, again, we're looking at how does Devin Energy make money? And why is it exciting right now? Or why will it be, why is someone buying puts right now? And, I'm also, let's just look to see, we can look to see holdings channel. We can look to see Devon Energy. These are all the big names, Vanguard, BlackRock, Big Energy, big State Street. These are the top guys in the world. So you're going to see them on all stocks. And then I might look over here and just see if I see anything that stands out of, that's a little bit out of the ordinary. And I don't really, to be honest. I'm looking here. I see Exodus. They're pretty good out of New York. Puts. These are the options. This is D Shaw's, just a volatility trader, market maker. This is an investment bank. You don't need there's nothing. So yeah, so I don't get anything from there right off the bat. I see 0.72. That's Steve Cohen there. I mean, I see some decent names in there, and I see some more institutional, non-hedge fund names that are pretty good here. So I don't know what they're doing. I would have to look. Maybe someone is reducing a little bit their position and wants to sort of get long, but I would say it's a valid put buy. I don't know what the reason is, and I'm a little surprised.
Okay, fair enough. Now let me pull up a question from Steven, which I think was good.
Go ahead. What would be a good strategy if you're on your last 1/3 and say your sell point is at 250% and the stock starts to pull back when you're at 230%? Good rule of thumb for stop loss when you're up. So you've got out of 2/3. You're on your last third, and say your sell point is, so you're trying to get your last third at 250, and the stock starts to pull back when you're at 230. Good rule of thumb. Here's a great example of what I tell people. Okay, so for whatever reason, your mind at 230 was starting to get a little nervous. Was starting to say, hey, Steven, like you're long this, you've made good money. Why don't you get out? When your mind starts saying things like that, that's your mind speaking to you. That's, the most sensitive part of this whole game is that part right there, that little voice. Okay. That voice has to either working for you or against you. Okay. And it's very bad when that voice starts working against you. Okay. When that voice starts working against you, you don't know what to do. So you have to appease that voice. It's a little bit, some people call it the trading gods. Some people say, I gotta buy puts just because, and I'm probably gonna lose, but I just gotta appease my mind a little bit. So call it the trading gods, call it your own sense, call it your mind, whatever you want. You have to make sure that you appease the mind, because if you don't, the mind is going to punish you. Okay. Meaning, you don't sell it at 230, even a little bit, it goes down to 150 and your mind is going to be on you. I told you, Steven. I told you, didn't I tell you? 250, you want to be greedy, and I told you to sell it at 230 because it wasn't going to go up anymore, and you had already made good money, and I told you that. And it's this nagging, annoying little voice in your head that doesn't stop. And so whenever you start hearing these voices and you're getting close and your mind says, I don't like the market, this stock I've held for a while, you know what I always say? If you have one left, I would consider selling the one. If you're trading 3 lots, and you have 3 lots left, I would say sell one. I would always try to start thinking about appeasing that little portion of your mind, because that, if you disregard that voice for too many times, that voice gets louder and louder and nags more and more and starts really eating at you and really forcing you to say, and then the next time it starts saying, and then the next time what happens is it says sell it, and then it's wrong, and then you get upset because you listen to the voice. Right. And so you start getting into this situation where you're unsure what to do. You're trying to guess, and you're not really, you want your mind to say, your mind is that risk reward barometer, and it's trying to say to you, take a little bit off. So sometimes if you've disregarded that part of your mind talking to you for 4 or 5 times in a row, I would say give it a little bit of something. Throw a chip to the trading gods and say, I did okay, I'm going to move on. That's my best advice to, can I tell you that it's right or wrong, or the answer's right or wrong? I can tell you that the mind is stronger over the whole game, and you don't want to mess with that, especially if you're on a good roll, right? A lot of times what can mess a good roll and confidence, okay, could be this, a couple of losers in a row, and then the mind is nagging you. So, so that's something that I think that's probably the best answer. I don't want to say get out, because it could be 400% tomorrow, and then it's then you're angry at me. You don't want, what I mean? So I will never make those decisions with people. I'm simply here to try to come up with good ideas, good risk reward situations, show people how to play the game, build a plan, and allow them to move the chips as they will.
And here's one more that I'm actually pondering myself as well.
Sure.
Just came in.
Go for it.
Here it is. So if
we are stopped out, could we get in again if they're still getting a lot of time? Okay, good one. Well, the first one I would say is, again, we talked about it yesterday. Stop outs. I liked, on a real stop out, I like to give it a break, because otherwise you get into this situation. I got stopped out, now it's low, but I like it, and then I get back in. You're really just doubling down. Okay, so stop. What that's doing is stopping out, letting it go. I would say give it a week, give it 2 weeks. You just stopped out. Otherwise, you're literally just doubling down, and we don't want to do that. We're not trying to commit more money to a name that we miscalculated and it didn't work. And the one thing we've been talking about the last 2 weeks is how in this environment you want to hold off on that third. If you can afford the 3 lots, the minimum 3 lots, sometimes you can do 9 lots, 3, 3, 3, because the price is only $1. But if you can afford the 3 lots and you buy 2 and it's going against you, don't buy the third. Just do not buy the third and wait till it turns. But in this case, if you buy 2 lots and then it trades back up and you're like, all right, I can get into my third, and you get into your third and then it gets stopped, then take a break. I usually take a month. If you get stopped out at 50%, you were completely wrong. So, this whole thought that the story might be good, if it's just the market, maybe you could do a repair trade. But I'd rather, if I'm getting beat, be long the 2 and then not look at it, and then maybe do a repair trade, which we don't talk much about. Maybe that could be a subject next week. Do a repair trade with the 2 that I have, and then get into my third lower, something like that. Okay. But I certainly don't like to double down, stop, and then 2 days later it's lower. Oh, I'm going to get back in. It's called doubling down. And you can disguise it as whatever you want, as, yeah, I just got stopped out, but now it's lower and I'm going to get back in. It is doubling down. There's a lot of other names and a lot of other stories. Again, you can do more damage doubling down to your brain than anything else. Double down, lose, and your brain's going to say, I told you. I told you. these are things that we're trying to prevent. You're trying to prevent those things. So I would say that. So even though it looks amazing, it may look amazing. Look at Las Vegas Sand, right? I thought we were set up perfectly. I thought, a good market, and the guy passes away. If it trades lower, if the guy doesn't pass away, still going, I think it would have traded 70, 72, but it didn't. And so when it trades 62, I can't stop looking at it either. But I'm trying not to say, okay, now I'm going to put it up again. I'm going to actually do this trade again. I just lost. And, you don't want to get caught into that too many times.
Okay. Cool. All right.
Good.
Fair enough.
All right.
Cool.
Good,
Awesome.
Good.
Thank you.
Good question. Those are good questions.
Yeah. Very good. Yeah. I wanted to know the answers myself. I say we call it a day, call it a week. And I want to thank everybody for helping us out and liking and subscribing, sharing and all that. We'll see you next week. If you have any questions, just post them down below. We see some for repair trades, so we might take a look at those.
Awesome. That sounds good. We'll do that next week.
Cool. Perfect. Thank you, Felix.
Be good. All right. Take care.